Good evening. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for the evening of August 31st, last trading day of the month. You know, for me, the unofficial begin of fall season is tomorrow. Yeah, I always look at September as the beginning of it. Many other traders do too. We're at about 6:15 tonight. And as you can see, the market's sort of quiet as we're here. Look how this dollar came roaring back today. The euro got hit as that happened. The markets are seesawing back and forth as the arguments, the anticipation of what's the U.S. jobs data going to be. We saw today some of the price index that came out strong at 4.2%. That does not say the Fed should back off on anything. Tomorrow is another nail. Which way do they go? The market is guessing for tomorrow, and I guess we can come here and look at this. For the payrolls data, we're going to get at 7:30, about 170,000 jobs. We get the August manufacturing sector PMI at 845. The ISM is going to come out with their manufacturing sector index at, coming in at 9 o'clock, and construction spending comes out at 9 o'clock. So you put these together, you got a lot of data. In ultra thin trading, I can just imagine the roads. Market's going to open, give you this data, and people, they're going to make their whatever they got to do. They'll look at it, and they're gone. I don't expect people to hang around for trading all day. I'll probably take off in the morning myself for a little bit here. Yes, I'll put out my updates over the weekend and everything else, as you can imagine, but it is the holiday, and people are going to go out and enjoy it. You can count on that. So I'll cover one of the details about Mexico that I want in the financial market update. I don't think I want to do it right here. What I will tell you before we get too far, and I want to remind you that you're coming to the end now of my Labor Day sale. A lot of you have taken advantage of it. If you want any of my charting courses, 40% off. Yearly research purchase, just the yearly, 40% off. You go to our website, iraepstein.com, under the word research or education. Either one will do the job for you. If you can, at any point during the video here, move to the top here, and you'll see a cursor, and it'll take you right where you have to be on the website. Okay. So together, let's now take a look at the markets and get where they're at. As you know, I've been saying that the first rally up going to be an important area to test. The 100, my mind's moving faster than my mouth. To test the 18-week moving average of closes, not the 100. I was today doing my new charting course, so my mind's already in that, and that's what I apologize for. But looking up here, that is where the market battle is. Now, there's some interesting things in the metals taking place. Market, as I told you, think of this market as a big break, like you're pulling on a rubber band, you let go, and you get a pop in it. Often you get either a third to 50% correction, and the market starts running out of momentum. Well, we got about that, and you can see how the market's doing that. The pattern is still one on the swing line of higher lows, higher highs, which is bullish. And come on, you've come out from under the 1920 area, and you've come up $55, $60 off of that. That's a good move that the market has had. Where's it stalled? Very clear. The gray line, you see that, and that's going to be the 200-day moving average. I should have brought that arrow right there. And here's your 18. You're sort of caught right in there. And the Bollinger Band is right here, and that's what you went up to. So what else? Well, this market's overbought, so it's not yet trying to say, hey, give me a couple of days here of something good and I'll embed. That can't happen. Embedding's when you convert an overbought situation into a powerhouse where instead of the market saying, I'm going to break, it's really saying, I want to add another leg to this market. Haven't done that at this point. The gold-silver ratio came down, and as I said earlier, I think silver's now starting to say, hey, maybe I've moved far enough on the gold, and you can see that right here. But silver, unlike gold, could become this powerhouse. Let me show you. You cannot go by both numbers because we're in Friday's trading session already. But what we can do is we can back to Thursday. Both numbers here are over 80. Both numbers here are over 80, and they're over 80 here. So we have the embedded reading. Now, one of two things happens. Either off the jobs report tomorrow. You're going to get a correction in this red line. Then if it drops, closes under 79, you probably get a further break in this market down. If the market goes up and keeps the embedded reading, I have no reason to think it can't keep running and go even higher here, probably towards the 2550, 2550, 2560 level. Wouldn't surprise me at all. We're at a very important number, and probably the jobs report's going to be the tipping point. I don't see that in copper at all. I will stay with what I said. This market's had a nice little run. It lost the bearish embedded reading right here. The goal was the 18-day average. You've carried a little bit further. It will take an event out of China for this market to add another leg to it. If they do something radical, kicks it right on up. If they don't, you're probably a bit too high because, as I've said before, I don't see how their property sector gets off where they're at. People not going to buy homes unless the government makes it so appealing that they can. Just telling them that, and they're doing this right now, well, we're not going to give you as much interest on your account in the bank as we did. We're going to cut it between 5 basis points and 25 basis points. Is that going to make you move? I'll give you another one. We'll treat any mortgage as a first mortgage, and we'll give you the lower rates. And we're going to lower rates around the country all at once and make you have more money in your pocket. Is that going to buy more? No, you still don't have confidence in the economy, and that's what it takes. Manufacturing did pick up a little bit, though, in China. Some of the readings climbed just under, 49? Anything over 50 shows a little expansion, so maybe they're coming to the very bottom of the bad in manufacturing. Don't know. It's going to take the rest of the world placing orders with them for that to happen. They're not proving they can do this all domestically, internally, with internal demand. In the platinum, I'll stick with what I said. Even though you have the embedded reading, this is very hard to get through. The first challenge of a 200-day average in gray, the green, the 100, and the Bollinger Band. Could it pop through it? Of course it could. Is it going to be difficult? Yes. Is it embedded? Absolutely. So a hard break in this market, if the red line stays embedded, which means it doesn't get under 79, probably going to be bought. If that happens, a lot depends on where it settles. It's got to settle better than in the 50% of that day's range. Otherwise, come Monday night, Tuesday, when the markets reopen, you could lose that reading. It's going to be a tricky day tomorrow. In the dollar index, which way? Does the market break through this low off tomorrow's jobs report and start attacking these lows? Or does the market get an assault to the upside again and go to 103.58? In other words, does the Fed go for more interest rates? Or the Fed go, I got enough data to show that the market's weakening and the dollar breaks off of that? Those are the two choices and where the market is. So is it going to be wild? You can count on it. I'll see you all in the morning after we get the labor report, and I'll talk about that, the jobs report, that is. I'll talk about that about 8:15 in the morning. Tune in. I'm Ira Epstein. Have a good evening, and remember, if you want the courses, give a click up there, or the research. I'm Ira. Take care.